Mr. Coleman.
Here.
Mr. Salzbrunner.
Here.
All right, roll call, or roll call, please.
Okay.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Celebrations. Dr. Kim?
All right, I'd like to introduce Ms. Desiree Godin from the intermediate school, who is going to present. Her Power Hour students will present their projects to the school board.
Well, 1 second, yes. I just closed it out when I was trying to watch.
Okay. We'll do a quick introduction. So I'm Desiree Godin and I am the coordinator for GT at the intermediate, high school and TTA. And then these are 2 of my GT students at the intermediate school. If you guys want to introduce yourself.
Hi, I am Henry Gingrich. I am in 5th grade. I tested for GT in 4th grade and I qualified for reading.
I am Dalen Cody and I'm in 3rd grade. I just came in this year and tested at the primary. I tested at the primary.
Yep. So we have a list of students here. Not everybody could be here, but I did want to give them a quick shout out. So these are our qualified students. They are on ALP, so they're on advanced learning plans, but we have a plethora of watch kids. And so these kids this year, Claudia allowed me to kind of pilot a class. Instead of just checking in with teachers, we have an actual time that we meet. So we meet either once or twice a month on Mondays for about 30 minutes. And so I have Dalen in 3rd grade, Taylor Fisher in 4th, Henry in 5th, Ryder Donnell in 5th, Tessa Smith in 5th, Abe Watera in 5th, and then Angelica Cisneros is my 6th grader. And so we got together and we got to name ourselves, and they chose Power Hour. So Power stands for Perspective, Opportunity, Wonder, Expertise, and Relevance. Our Power Hour kiddos got to do passion projects this year. And we were fortunate enough to go to the CAG-T conference. Brianna Dutro and I went, and this is where this kind of idea came from. So a passion project is an individual project that the kids choose. So it's can range from anything from doing a book to doing a board about Yellowstone. We have 3D printing, which you'll see in just a minute. So it's something that they want to explore more throughout the year. It's not attached to any specific curriculum. It doesn't have to meet any specific standard, although all of the projects do. They meet both Common Core standards, and then they also meet what are called ISTE standards, and those are computer generated standards and technology standards. And so each kid gets to pick their own project that they wanted to complete this year. And they have to be in one of these areas. So it either had to be a mastery project. This is something maybe you already know to do, but want to get better at it. An innovation project, kindness project, awareness project, or perspective. So they each get to pick which one. And some of their projects actually overlap into other areas. And then we go through a whole plan. They had to plan, they had to present their project idea, they had to give me material lists so that I knew what they would need to complete it. And then we would meet every time and see where they were at, what supports that they could get. So we had things like we ordered filament for 3D printers. I ordered cows for a cattle project. Yeah. And so it's just a wide range of things that each one needed. We took a quick field trip this year to Klein Makerspace, which was a lot of fun. The kids got to see all the different machines. They did a couple tutorials for us. We got to see their giant machine that goes out in the fields and plants and pulls weeds and things, which was really neat. And then they had to complete a project. So They went ahead and cut out a pre-made box for us, and then the kids all assembled it, painted it, or stained it however they wanted, so it was a lot of fun. Abe, he's doing 3D, which we'll see in a second, but he actually got to talk to an expert about CAD drawing and how their machines work. And then Angelica, who is writing a book, she's gonna meet with Stephen Matthews Jr., who is a published author. So each one of them kind of get to meet with different people in their areas who are their experts to ask questions. So here's a couple of the student projects so far. We have a couple that have one more week to complete. But Angelica, she is writing a book. She's already completed her first chapter. Abe is doing 3D printing. Abe is doing a kindness project and a mastery, so he already has a 3D printer. He's designing, but he's also, the funds that he raises from his prints, he's donating to the Epilepsy Foundation in honor of his brother. So that's a kindness overlap project. Damon did the Great Wall, so that was something he wanted to research and learn about. And his project is over here. If you guys want to take a look at it, I'll leave them up and get them in the morning. Henry is doing Beyblade Stadium. So Henry is really passionate about kind of nature and the environment. And so he wanted to design a stadium that is more eco-friendly and doesn't have, what do you call them, plastics? Microplastics. So that was really interesting. So he's designing a stadium. And then next year, if we get to have the same opportunity, I'm hoping that he can actually make the stadium. So that's kind of our goal. If they want to keep working on the project, they can continue it. And then they can start a new project anytime that they want as well. Taylor did a Minecraft build. So if anybody's familiar with Minecraft, it's a video game. You have to play it in order to earn different rights to the game. So it took him a really long time, but he built one of the geysers from Yellowstone in the game, which is really neat. And he's looking at doing Devil's Rock?
Devil's Tower.
Devil's Tower, he wants to do that one next. We also found out that Ben's Fort is actually in Minecraft, so that was really neat too. So we got to compare some of that this year, which was fun. And then there's a couple of the Abe's printed 3D printing. He's already done a dragon, a snake, an apple. This is these two on the right are fidgets, which are very popular. This one comes apart, and then this one is like it's like a board that's linked together, which is really cool. So we're hoping to continue this for next year. We do get funds for GT, and we're hoping that we can grow this program, maybe even into meeting with high school students that want to create a passion project, or carrying these passion projects from these kids into the next building. And so I just wanted to kind of give you an overview of some of the really cool things that we're doing in our building for, you know, a wide range of our kiddos. And just thank you for supporting those activities. It's really important for kids to have a creative outlet and something that they can pursue a passion. So do you want to add anything, Henry? Do you want to say anything? Jalen, do you have anything you want to add? No. Okay, public speaking is not our passion. Do you guys have any questions for us?
I just want to say good job, good initiative.
Cool.
You know, and doing, you know, 3D printer or Minecraft, and that's building for the future and other things, so good job.
Yep, did I?
Yeah.
All right, next we have audience portion. Jill, do we have anybody sign up?
We do not.
Right. All right, and letter E, approval of the agenda.
So we added the following items to the agenda. We added the consent agenda. We added Brenda Woodyard, Amy Salva, and Richard Romero for financial reports. We added financial reports on May 7th. And new business, we added proposed budget, and staff added to resolutions as we've been hiring on 5.7 and 5.11.
I move to approve the consent agenda as presented.
Just the agenda.
Okay, not the agenda.
It's just the approval of the agenda.
Move to approve the agenda as presented.
I'll second whatever he said.
I have a motion and a second to approve the agenda. Questions, comments? Hearing none, roll call.
Mrs. Ayala. Aye. Mr. Bickle. Mrs. Hines.
Aye.
Mr. Coleman.
Aye.
Mr. Salzburner.
Aye.
All right, consent agenda.
I recommend approval of the consent agenda as presented. Consent agenda is below. If you'd like me to read it out loud, I can.
Aye.
I make a motion that we approve the consent agenda.
Second.
I have a motion and a second to approve the consent agenda. Questions, comments? Hearing none, roll call.
Mrs. Ayala. Aye. Mr. Bickle.
Aye.
Mrs. Hines.
Aye.
Mr. Coleman.
Aye.
Mr. Salzburner.
Aye.
All right, financial report.
We're ready?
You're ready.
Hey.
I will turn it over to Sarah.
What are we doing first? Not budget.
Not budget.
Financial. And what you guys have in your packet is for April or March? April, okay. One thing that I want to say to you guys that is drastically different from April to May, now that I have a view into May, is that we got our property tax in. So about 3.5 million, that was deposited early part of May, and that immediately got pushed up to Colorado Trust. So we can make as much interest on that as we possibly can. So, that's a big one right there that shifts how everything kind of looks. But as far as April goes, there's nothing that we've seen that's of much concern. The staff and administration have been doing wonderful with keeping things in the system. And what I mean by that is doing purchase orders in the system so that we can watch all those in what they're called encumbered funds. So we can keep a closer eye on the books. Ultimately, we've been looking at cash flow. Don't have to be as stressed out about it currently, but that doesn't mean that we're going to lift our foot off of the gas pedal, because we want to make sure that we stay very consistent with all the patterns that we've started to build. So I have kind of a way of answering a question that's more on budget related, but it's going to point back to these financials. So one thing I want to do, and you guys all know how passionate I am about that darn balance sheet, but I want to spend some time with you guys tonight looking at that balance sheet. So I'm going to pull it open for April, because I'm going to hopefully answer a question that we're going to have maybe a little bit more discussion on when we get to the budget in a little bit. So if you remember what's so exciting on that darn balance sheet is the top area, we see the cash that are sitting in the bank accounts. The assets is what that's called, or anything that's that's owed back to the district. So you'll see at the very bottom line of that assets area where it says general fund due from student activities, 46,000. And what that means is that we've had expenses along the way throughout the course of the year that the general fund paid for. A lot of times it comes from credit card use, purchase card use. That number towards the end of the fiscal year, when we get into June, will need to be reconciled. So we actually do a cash movement that will clear that balance out. But the great thing about those, they're considered due to, due froms, is they're basically big giant sticky notes that we keep track of throughout the entire year of who owes who money, so we can go ahead and make that transfer of that cash when we get to the end of the year. So of all the things that are listed in the assets area, bank accounts, and then I'm also always watching to see who owes us money. And in this case, it's our general fund, Fund 10, needs to be getting some money back in from Fund 23. Does that make sense for the most part? And again, it's helped tremendously that we are running the books on, Kim and I keep them about 2 weeks behind schedule in the accounting software. So constantly watching for that. So then that way we can be as accurate as we possibly can for you guys. So the next area down are liabilities, or that's money that's owed out that we owe mostly other entities, and a lot of those are tied to the payroll. So I want to point that out because that's, and again, that's a lot has to do with the timing of when do those payrolls run, when are we making our para payment going out. And then I'm always watching that payroll, the para line, to make sure that that balance is staying low, because that was one thing that we ran into when we first started helping out.
And that's what tells us we're making the payments, right?
Correct.
Right.
Yes, and so if we see those balances going really high, a person like me or probably you would start asking questions of why do we see these large balances sitting in there? And then the next tiny little area down from there is considered the equities, or that's where that fund balance number is. And so because we have a number in that lower area where it says net fund change, and it doesn't have a parentheses around it, that means that so far for this fiscal year, so books being closed through April, the district is currently running at a loss of that $1.4 million. Not a big concern because we're now starting to get those property tax collections coming in. So that'll help right size that over this next few months as we go through that. So any questions on Fund 10? Okay, the next area down is insurance reserve, which we are going to work with the auditors to get that completely off the books for this next year, because what used to happen years ago is it was a state statute that we had to keep track of all the accounting of the property and liability insurance policies. Basically came and went, sat in their own fund or separate set of books, which that doesn't have to be the case anymore. So that's just part of some more cleanup that we want to do when we go through audit. So that's what's coming up. Fund 19, preschool, same kind of thing. It's pretty hanging out pretty low. Fund 21 is the next one that I want us to take some time with. So Fund 21 is the food service program. And again, what you see is for the most part, food service program, and we'll see that in the budget tonight when we talk about the budget, stands on its own. And so it's a self-supporting fund. Which I don't see that with a lot of districts. So hats off to the director and how this program is running, because this isn't something that I typically see with other districts. And so that food service, you can also see on here the net change, which is that bottom line where it again doesn't have those parentheses around it. So that means that so far the food service program is running at a loss of 472. But the food service program relies on those federal and state reimbursements for We All Eat Free program. And so those run about 6 to 8 weeks behind once we do the request for reimbursement. So it'll take a minute for that to get caught up, but it'll come right up to speed as well. So Fund 22 is the grants fund. So far we've had a lot of activity going on with trying to make sure that we can pull down as much as we possibly can on those grants for this upcoming year. That is something that Jared's been working a lot with some Abacus staff members as well, to just make sure that they can go back and look at prior years and funds that weren't pulled down and see if we can't get those funds pulled in. Is that right, Jared?
Yep.
You can give me a grade later on. Okay, so now I'm going to go over into Fund 23. And there was a question earlier today about Fund 23 and the balances. So we'll talk about that a little bit when we do the budget as well. But I want to point out, because this is a balance sheet and it's such a wonderful report, what this does is it shows us each one of the balances that are in each one of those clubs or activities. And so you get a chance to see them all separated out down here below. So again, in this case, they're sitting as assets. So we should see all the numbers without parentheses around them. And if you see any numbers that are out here with parentheses around it, it's something that we need to pay attention to.
So I'm understanding, using, for example, NJHS has 630, but the yearbook is in the whole 420, right? Okay, I'm just making sure that I'm reading it right.
Yeah. Yeah. And again, this is accounting for all the activity work that is done largely by students. So we as a district are managing those funds on behalf of those organizations. So it's not that we're ever going to take and put, general fund dollars we get to grab and use it for some other program that's not doing well over in the general fund.
Right.
However, as I said in the first page where we have that due to, due from, sitting, and at the end of the year, we'll do a cash reconciliation to make sure that we pay back those expenses that hit throughout the year.
So that payback will come out of this Fund 23.
Yeah, well, it'll be an actual real live cash movement that does happen, yeah. Some districts do it monthly, depending on how much interactivity they have. In this case, we really like to just do it here annually because it's just this one fund that's talking back and forth for 10.
And this is one, yeah, I'm glad this is all here. This is Rickles got his own tennis fund where somebody has his own football fund, because that's how it worked when
Yeah.
Good.
Yeah, again, and I think I said this to you guys a few months ago, but you can do a lot of snooping with the balance sheet. And that's the reason why I love it. Because I can see cash balances, what's sitting in banks, what owes what, that kind of stuff. But again, there's a lot of things that can get answered from this. So I wanted to just kind of slow down a little bit and show you guys where these balances sit. So you get a chance to see that. And we've worked a lot this year on trying to make sure that those balances are correct, number one. But then also, as we have monthly transactions that are going on, making sure that we are accounting for all of that, whether they're deposits coming in or payments going out, are accounted for in the correct clubber activity as well. So let's see, I gotta put the glasses back on. Fund 31 is the debt service program. So that's just accounting for the district's debt, the principal and interest payment that's owed out each year. Fund 41, which was capital reserve or capital repair, mostly that has been sitting pretty idle too. That must have been that the district had a bunch of capital projects happening years ago. And so this fund currently has been sitting quiet this year. And then I'm going to stop back here in the Fund 43 category, because we're going to talk about that a little bit more when we talk about the budget as well. So Fund 43 are your capital repairs throughout the district. So Fund 41 was developed back when probably there was more construction happening around the district. One of you guys that have had a little bit more historical background would maybe help us out with that. It's been years though.
Yeah. I don't know. Air conditioning, heating units, Rich, do you think that's the last big one?
Yeah. HVAC from COVID time.
Yeah.
Okay. Fund 41 is typically the use of bond money, so borrowed money is.
I think it was, it's under relations.
Okay.
Rebuild.
That was what, 2019 or so, somewhere in there? 17.
Yeah, I was gonna say 17, 18.
So, yeah, I think that's right, 17, 18.
Was it before COVID?
Yeah, it was before COVID.
Okay.
BFC, before COVID.
BFC, that's a BFC. So I'm gonna stop here because that's the end of our beautiful balance sheet. One thing I do want to point out is that there's been a couple of funds like Fund 41 and the other one being Fund 18, where we have to work with the auditors in order to get those funds pulled off and moved into appropriate areas. So it's because those funds have their own assigned fund balance to them. We need to make sure that we are doing the appropriate transaction on the books that accounts for that. So we just can't just go in and be like, today, let's clean this up, let's get it done. Because it also has been a part of the record that's been in those audits. We want to make sure that the auditor works with us so that we close down those funds appropriately and we get them off the books the same way that they're going to be able to account for it as well. Pretty juicy stuff, right? The other thing that I want to take some time with is that cash report. So, and I don't know if you've got it in a PDF file or if that's an Excel file. That cash report, the one I'm referring to, shows us
Cash flow.
cash
Yeah.
flow, how much money's sitting in the cookie jar.
Yeah.
The top page says cookie jar. Let me pull that up because there is a spot that I want to talk about that's just new and improved. And are you guys looking at it from the view of being an Excel file?
It's a PDF.
Or is it PDF?
Yeah.
Okay. So that file, as you guys know, has been amazing because especially as we've been having cash flow issues, we've been able to kind of monitor how far out have we been, or are we in a spot where we're gonna get into any sort of trouble? So, trying to think, was it 3 or 4 months ago now that we set aside the payroll reserve is in capital, Colorado Trust, excuse me. That payroll reserve is the amount of dollars that we owe out for our, teacher contracts through the summertime. And so months ago, we decided to set aside that money that we knew the amount. Why do we not just set it aside now? Because as cash flow was getting stickier and smaller, we wanted to make sure that no matter what, we could verify and guarantee to the state, to the staff, to anybody, we have the money to support that payroll. So as we were going further and further into what we had as far as our set aside reserves go, that was one thing that I wanted to let you guys know is called out on its own. So the other thing is, as we've been watching the outstanding checks that roll through the district, that balance has been getting smaller and smaller. A lot to do with the fact that, you know, we're this far into the school year, so it's not like we have that many more transactions that are coming out. But again, back to the amount of work that the administration office has done, amazing in helping that stay current so we could keep a track of how much does the district really owe as of today. So one thing, because you guys are looking at a PDF, is next month. What you guys are going to start to see is that there's another tab that we had to add, unfortunately, and it's for fees and fines. And unfortunately, or fortunately, we have had a couple, right? Sizable hits again that have to do with the IRS. This has to do with missing ACA reports. So ACA reports, ACA stands for Affordable Care Act. What happened was back in the Obama timeframe, everybody needs to have health insurance, blah, 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 blah. Well, businesses need to report that to the IRS, and that report is called the ACA report. And what had happened is that the district was not filing those reports or filing them on time. And so we've just now received the first of many communications regarding this, and it's a hefty one.
It's the same amount that we talked about prior. We're just finally getting the actual bills. We are meeting with, Sarah and I've been meeting, our attorney, she advised us to meet with this other attorney who specializes in school districts and taxes. So we've had a few meetings. We're trying to see if we can get those reduced or abolished.
Yeah.
So we're still working on that.
It's unfortunate though, right? One thing that I talk about a lot with other people that are sitting in the business office is the sad thing about payroll and all the different things that roll and the compliances that have to get, you know, tugged around within that payroll. If that person's not aware of all of this stuff that has to happen throughout the course of the year, some of this stuff does get missed. We all know that we need to issue W-2s out, right? If we didn't do that, we'd be having staff that's screaming about where's my W-2. So those are the ones that we're all fully aware of. This ACA report, unfortunately, is something that, and at one point, the government had said that they were going to stop asking businesses to report on those, but obviously they haven't. So the district is up to speed. We have absolutely got it 100% up through 2025. So, but now this is unfortunately looking back to those prior years where they hadn't been filed. So, you know, in order for us to be very transparent with you guys and to let you know how the finances are going and all the things that we're working on, I always feel it's I owe it to you guys to not only say the good shiny star stuff that we've been doing, but also if there's negative things that roll along the way, we'd rather be transparent with you guys sooner rather than later, so you're aware. And hopefully Patrick and I can get this attorney to, at least if it can't get away completely, can they reduce them down some, with us recognizing that of our failures in the past, we've corrected it. We can show you we've corrected it. Is there something that you can do to help us out? Do you guys have any other questions, or I'm gonna?
I guess I just have one question on the cash flow sheet.
Yeah.
I noticed the daily burn rate
Yeah.
has gone way down.
Yeah.
Is that just our team, like, doing a good job and
Oh, yeah.
belt tightening?
Yeah.
I mean, it's gone down almost $10,000.
I know, yeah, it has a lot to do with the fact that we, have got the purchasing under control. And so we're able to figure out, that, yes, we don't have as many large sizable, invoices and payments that are owed out there. And so, yeah, that burn rate it's
almost $10,000.
I know,
today.
I know,
Yeah,
yeah.
good job, everybody.
Yeah, so again, it's again, wanting to tighten it down, but also make sure that we're still, keeping the wheels on the bus and as staff members need something, making sure that we're able to provide that obviously for them. But no, a lot of that is the work that's happened this year and making sure that we've got those purchase orders in place.
Jill, this is an action item.
It is.
Okay, I'd entertain a motion.
Financial report?
Yeah.
I move to approve the financial report as presented.
Second.
I have a motion and a second to approve the financial report as presented. Questions, comments? Roll call.
Mrs. Ayala,
Aye.
Mr. Bickle,
Aye.
Mrs. Hines,
Aye.
Mr. Coleman,
Aye.
Mr. Salzburner.
Aye.
All right, next we have the minutes.
Move to approve the minutes from the April 2026 meeting.
Second. I have a motion and a second to approve the minutes of the April 27th, 2026 meeting. Questions, comments? All right, roll call.
Mrs. Ayala,
Aye.
Mr. Bickle,
Aye.
Mrs. Hines,
Aye.
Mr. Coleman,
Aye.
Mr. Salzburner.
Aye.
All right, superintendent report.
Yes, so I would like to formally introduce some new folks or not new folks, but new roles in our district. I'd like to first introduce, we approved him last month and our new president, jeez. Our new principal, you're not president.
Hey, you could propose
Tiger Trades, Mr. George Ferguson.
Thank everybody, thank the board. I've been in district for a very long time, so I'm super excited to what we have going forward. I mean, we have a kind of a blank slate, we can create it the way we want to. I've been here for so long, I have so many ideas, and I'm really looking forward to building TTA up into pride of Ohio.
Our new high school principal, Mrs. Brenda Woodyard.
I would kind of like to do the same thing as George. Just thank you for the opportunity. I really am excited about this opportunity. We have a great group of staff at the junior senior high, so I'm excited to continue to work with them in this role. Also continue to work with the other admin in the district as we all work together to unite the three buildings and hopefully move forward in the vision of the district and fulfilling that and making Wahanta a place that people want to be.
And our last announcement, our new director of operations, Mr. Richard Romero.
Well, with the speech as well. Thanks to Dr. Kate, thanks to the board for trusting me with this whole process of being the new director of operations. I've been here 15 years and I just want to see this district drive forward. I've been through a lot here recently and I'm willing to give it a shot, give my all. So thanks for trusting me to do it.
I'm really excited. All three of these folks are gonna really, their visions of where we want to go moving forward aligns to what we're talking about in our strategic planning board, my vision. So I'm really excited to have them on board as we move forward. So congratulations to all of you. The next big announcement I have, an early announcement, but graduations this Sunday. I cannot believe that the school year is almost over. Someone told me like there's 7 more school days. Rest of everybody else we'll finish up next week, but it's gone by super fast. We're just, right now, a lot of end of year activities going on at all the schools, everybody's finishing up. Baseball, maybe we'll make the state playoffs, we don't know where, they'll be finding out this week, and we have, I believe there's 5 athletes going to, Littleton this weekend, not Littleton, Jeffco Stadium for state track. So it's that time of year, and looking forward to seeing our kids graduate and go on and do good and great things.
All right, new business.
I'll turn it back over to Sarah.
We're in this down. Well, hi, my name is Sarah. I love numbers, so let's get back into those. First off, I want to thank you guys so much for the time that you spent with us. What was that, a few weeks ago, a couple weeks ago, when we were going through the development of the budget itself. You guys all had some good opportunity to have your questions. And by all means, if you ever continue to keep having questions, you could reach out to us anytime. So this budget that we have in front of us today is the proposed budget for 26-27. I'll tell you, as of this morning, we are still getting emails from CDE talking about funding sources and all the things. So good times, yeah. So with that, let's see, if you go to page 2, you're going to see the budget assumptions. As we talked that day when we were on, this page really tells us how does the district get its money and where's it coming from, and then how does CDE calculate that piece, right? So we have our October count, then you have the one down below that, which is the averaged count. And so you'll see that, you know, to some degree, this is why we've been in the position that we are, because those student counts are continuing to lower and drop. The other thing is that per pupil funding line, where this year we're getting 12,500, and next year, at the time that this was printed, they said that we were getting 13,300. That number will change, and maybe by the end of this week, maybe sometime into next week. So still waiting. It's not going to deviate by far, but it still will have probably a different change. And then that net assessed valuation, which is the other area that brings in money. That's what drives that property tax collection that we get each year. So, and then down below, just want to take a second to point out that the district, the down below area is more of the expenses that the district has, just some high level expenses. So the contribution that we do to the family insurance program or premium is $800 per enrolled. And we have our para contribution that's not changing at 21.4. So that's the amount that the district pays on behalf of each one of our employees. The Medicare stays the same, and then that minimum wage rate. So those again are the big drivers to what we're going to look at here as we go through the next few pages.
So in the past, one of the things that's gotten us in trouble is we've budgeted and our count has been off. We budgeted based on a number of kids and it hasn't come true. So this year we're budgeted on 26 fewer kids. And I know it's a guess, but you think that's right? I mean, I know it's like, I don't know how to tell.
You're never sure.
Right, exactly.
Because, I mean, Kim could be absent that day. Bobby's here, you know, so you're taking a shot in the dark.
Yeah.
But basically, when they adjust it, they're finding kind of the average. So it's never going to be spot on.
Right. The problem in the last few years, though, is it wasn't just the count that was coming under. We were just flat out over budgeting. We weren't paying attention to, we had from the get-go more budgeted than we had bringing in. So we've been deficit spending for years.
Yeah.
That's why we've decreased. I mean, when you do it 1 or 2 years, you still have reserves, you know, your savings, but we've gone through those. The one thing I will say though, that we are going to be part of a home harmless. So we know pretty sure, as long as the state doesn't change that, we're gonna know exactly what we're getting for the next 3 years. The scary part is it's gonna be higher than what our student count is, so we have to still prepare for that cliff that's coming in 3 years. When we're gonna be taking all of the hits that the rest of the districts are taking currently, with the change in averaging from 5 down to 3, and who knows what it's gonna look
Yeah,
like.
where it goes from there.
I have confidence you guys, you're gonna have such a superior product, you're gonna bring everybody.
We're just gonna have it all. One thing though, when we do that amended budget in January, that's the time that we can adjust ourselves down if we had to. But over the next few years, as we're in this hold harmless program, basically what we need to do is continue to keep talking about if we were funded at the current rate that we currently have, what does that look like? So that way each year we can make sure we're accounting for that. And then this cliff that we know is coming isn't going to be quite the extremity that it will be if we just look the other direction and pretended life was great. So when we start going through, especially the amended budget timeframe, December, January, we're going to have those discussions because I want to make sure that we're all on the same page with, we need to make sure we have X amount of money set aside because that cliff is coming, guys. So the next page down just kind of gives you a historical trend again on what that student count and those rates are that have been dropping. And we're not alone in this. I mean, all districts have been having student count adjustments mostly dropping down. So then the next one that we're going to spend a little bit of time with would be the general fund. General fund number 10. And I want to talk about that upper area, which says the beginning fund balance and then the total beginning fund balance. So you see historically, we get to look back to from 22-23 to what we're projecting here for this 26-27 timeframe. Watch how that total beginning fund balance number decreases year over year over year, right? So that aligns to what Dr. K just told us, which is we've been overspending. Right there, that shows us right there, crystal clear what's going on. So what we're saying for this upcoming year, for 26-27, is that we're going to start the year off with $2,500,000 in our fund balance, or what our remaining savings account is as we start the year off. We'd like to get to a spot where we are starting to build that fund balance back up. So the next area down are our revenues, local revenues. The majority of the dollars that are sitting in that category are the property tax and specific ownership tax collections. The next area down is it's called intermediate revenue. That's mineral lease dollars. As you can see, there's really not that much. And then you have the state revenue. And so that state revenue, the majority of that is that state money that CDE gives us. But also there are some state funded grants that sit into that category as well for Fund 10. So the next line down, I'm going to talk about as well. So that says transfers and allocations. And so you'll see that historically, year over year, we look way back, you can see a $1.3 million transfer that went out of Fund 10. Dropped to 900,000, went back up to 1.2. This current year, we've tightened the reins down dramatically. And so just 250 are going out. And then now we're projecting that we need to do 830 for this next fiscal year. And we're going to talk about that when we get over into Fund 43 for the most part. It's the biggest portion of that. So the next area down, I'm just going to explain what kind of expenses go into each one of those categories. And our two big hits that we should see always should be in instructional services, which are those expenses that are in those classrooms. And also then in operations always run right, not close to it by any means, but that's the second in line with the amount of dollars that are spent. And so again, we can see that our instructional services trend has been around the 10 million mark. You see a relief though in 23, 24, 24, 25. A lot of that had to do with some COVID money that came in and CARES Act dollars that was received by the district. So from this current year being at 10,200,000 down to 9 million, a lot of that has to do with our reorganization and staff staffing plan. So people services, you can think of those people as your nurses, counselors, librarians. People there that are helping the success of the students without instructing them. It's kind of a way of looking at that. And we have instructional staff support. So those are costs that the district has to help the teachers become better teachers. So a lot of professional development expenses go into that category. General administration are expenses that are board level expenses, as well as superintendent's office. So legal services, audit services, accounting services, CASB amounts go in there as well. So the next area down is school administration. And so that is our principals and heads of schools, making sure that those schools are running exactly as they need to be. And the next area down is business services. So business services is really what it costs the district to run the business office. So there could be check fees, check costs in there, banking fees, that kind of small stuff. And then here we go with that maintenance and operations. And so again, that number being 2.2 million this year, going down to 1.9. A lot of that, we can talk about that when we get to Fund 43, because those repairs, maintenance issues that we're having around the district, we're gonna have an accounting for those over in 43, so we can kind of keep track of them in a better way. So transportation would be busing and fleet. Then we have central services. So central services is a grab bag of fun because it's typically IT, information technology stuff, as well as the insurance policies that the district has, property insurance, liability. And then other is, I think we talked about this when we were developing the budget. Unfortunately, other, as far as CDE's chart of accounts go, mostly accounts for principal and interest that are out there. So if we owe any principal or interest on any of the copier leases, would sit down into that area. So another fun thing to see is that we are presenting a budget for next year that sits with a positive or a projected surplus of profit of $242,000. So I'll stop there. I know that you guys, we had a chance to talk about all this stuff, but I also want to know if there's any other questions that have kind of come up since then that you're looking for any more clarity on, especially for Fund 10.
The only blip that I was, when I was reviewing this, was the intermediate revenue 24-25. What happened? I mean, do we know what happened there?
It's totally a problem with coding. Somebody coded something into that area that was incorrect. Because we haven't had that 24-25 audit done yet, Kim and I don't want to reclassify that number until we go through the audit.
Okay.
So you'll see then at the very end, the total fund balance. So that projected increase to fund balance at the end looks like it's going to go to 2.8. And that, again, the goal is that we don't want to be deficit spending year over year over year. We do want to be adding in a little bit of fund balance. We don't want to now make this into we're running it like a for-profit company by any means. And so we need to be careful about that number, but we feel very, very good that we will be able to hit that number.
Do we have a long-term goal, or I know there's a lot of, at CASB, there was a lot of talk about fund balance.
Yep.
And so do we have a policy or a goal as to what we want that fund balance to get towards?
That I don't know if we have a specific policy, do we?
No, that I know. I'd have to look. I don't know the answer to that. We do want to keep it, our goal is to keep it where, like Sarah said, it's not a for-profit, but you know, we have expenses that pop up with an aging high school, that we just need to make sure we can afford whatever we need if something just to happen. I mean, it's happened almost every year. That That's why we want to keep that. We don't want it to be huge, but we want to be able to not be deficit spending and be putting in there a little bit just so we have a little security blanket.
So we might want to look at that down the road, and I would say we haven't been in this position to be able to really talk about what is it that the board would like to see that we keep in reserve. So some boards want 45 days cash on hand, some boards want up to 90 days cash on hand as their kind of tolerance level. So 90 days would give us 3 months of operating expenditures. But again, we're not there yet. But I'm proud to hear you guys are even, I mean, we're getting there. Give us a minute, but we're gonna get there. So the next few pages is more detail for you guys. I'm not gonna go through it line by line, but what it does is it's gonna break down. Geez, she said local revenues was those property taxes. You can kind of fact check me back over here to see if I said that correctly. And so local revenues, intermediates, that middle release, state revenues coming in, and then you'll see the transfers and allocations. So that transfers and allocations, we saw on the front page that we wanted to move $836,000 from Fund 10 out to other areas for us to give support. And so what you'll see there is $686,000 is the amount that we would like to move over into Fund 43, so a separate set of books, so that we can start tracking these district-wide expenditures that we have for repairs and maintenance on our buildings. And then you'll see that the People Activity Fund, so Fund 23, is getting $150,000. And so that's typical that we see with other districts as well. Those dollars there go and it helps support some of those clubs and activity expenses that these kids are not having to raise the funds for. But wanted to circle back to the question that was, you know, how much dollars is the district providing over to Fund 23? And that's $150,000.
How does that get split up between all the activities?
Well, it depends on the need of each. We look at, so how much does it cost? So like for band, for example, how much does, you know, what are the costs for the band, the travel, those types of things, you know, tennis, how, you know, what we need. Some programs are more expensive than others, you know, looking at how many kids are in the programs, or like football, you have to get the helmets and shoulder pads reconditioned every year. Just knowing the different costs, but trying to looking at where we are, where we're gonna be able to spend to be appropriate, what each team needs.
So all of that, with those groups you just mentioned, all of that comes out of this 150.
Yes.
Okay.
Yep. Yeah, ultimately what those dollars are for is so that, the district's not, I've heard the term canceling Christmas, right? We're not gonna say we're not doing prom, guys, because we don't have the amount of dollars. That's not at all what the district is gonna do. So that 150 goes to help support those activities so that they can be successful and continue on. So then the next few pages go into, just like we saw with the detail with the revenues, these go into the sections of areas within the budget expenditures that we do. So I'm again not going to go into great depths with those line items as well, but if you guys do run across anything ever that you have any questions on, let us know and we can answer them for you. So right after Fund 10, we go into Fund 21. And Fund 21 is the food service program. You heard me talking when we were looking at the balance sheet about how Fund 21 is pretty much its own self-sustaining fund. And we don't have to do any transfers from Fund 10 over to 21 to help support that program. And a lot of times other districts need to help support it mostly by salaries and benefits, but we pay for the salaries and benefits over in Fund 10. So then that way we don't have to do that weird transfer that would help support that. So for the most part, what you're gonna just see is that the revenues coming in for that program are gonna be the same expenditures that we have going out. And we have Fund 22. Fund 22 is the grants fund. The grants fund is not allowed to hold any fund balance amount. So the grants fund is supposed to work that our revenues coming in are supposed to equal our expenditures going out, dollar for dollar, penny for penny. And so we can't be utilizing that fund to be a moneymaker either. And so by the fact that you don't see any beginning fund balance in there, it's because that fund is not allowed to hold any fund balance. Little random fun fact, I know you guys were just itching for one. So area number 23 or fund 23 is again, those clubs and activities. So that beginning fund balance number of that 700,000 that you see, that is what we've been able to sort of ascertain as we've been going through prior year balances and all that. What was the amount that we see as part of those bank balances, what was sitting in the banks during those timeframes? And so to the best of our ability, what we've been able to find is this $700,000 amount that's a placeholder until we can get those past year audits done and verified. So then
it's
you'll.
not gonna be $700,000.
Yeah, I don't think so, but we're trying to do some placeholder so that we can, to the best of our ability for the moment in time that we were doing, So then you'll see that the local revenue coming in is projected at 200,000. And then you have that allocation or that transfer coming in from Fund 10 of the 150. So that shows that the whole fund of all clubs and activities is we're appropriating $350,000 for next year to kind of account for all of those expenditures that come in and out.
I guess I don't get the local revenue piece.
Yeah, so local revenue comes in from gate fees.
Gates,
Athletic fees.
athletic fees.
Okay.
Yeah.
And this is the first year where we bringing them back into one accounting system. Because before they had their own separate accounting system, so the gate fees were not coming into the general fund to pay back or to help with, the expenses. They were just sitting in that other fund. Got it.
Yeah, it's been a project, that Fund 23.
Which has caused us some issues with the audits and being able to track everything.
Yep.
Is it accurate to say that part of the reason why our budgets have been so messed up the last several years is because the audits hadn't been done? So a lot of when they did the budgeting, they're basing it off of just
Sludge.
guesses
Yeah,
of
sludge.
numbers?
Yeah, that's part of it. I wouldn't say it was the whole issue.
Yeah.
But yeah, I mean, if you don't have good, clean ideas about where you're currently at, how are you gonna project out where you've been or what does that look like? So, yeah,
Delays in the
100%.
audit really affects every.
And I would
Yeah.
say the
Yeah.
other thing, and I'm gonna give Sarah and her team kudos. It's just having the organization of what goes into the budgets, how we track everything, making sure that all the accounting practices and procedures are above board.
I think not having science teacher be a budget director.
Yeah. Yeah, so I think there's several factors, but definitely what you asked is one of them.
Yeah.
Yeah.
Yeah, I mean, how do you know when you're not, how do you know what you're operating on if you haven't done accurate, closing of your books in months and months and months? So yeah, it all is just this great big bundle that wrapped up and there's your issue right there.
If you've got somebody that doesn't know what they're doing.
Yeah.
Too, and codes it wrong, I think that was a big
Yes.
deal.
Yes, yeah,
Yeah, so yeah, I'm glad, that we have you that knows what you're doing.
this is my jam. Yeah, I love me some of this, as you guys can probably tell, yes. So, and now I'm gonna jump us down to Fund 43, which is the last page of the presentation for tonight. So Fund 43 is the Capital Reserve Fund. So that's where we would like to start to account for all of the different repairs that are happening throughout the district-wide. And so what we worked on with the gentleman as well was a kind of a project list and then a priority, labeling it priority 1, 2, and 3. So we could figure out from there, what do we need to account for this next year? And get it budgeted so that way we can start really accounting for it in the proper way as well. So I know that this page itself does not break down then into all of those different categories. We showed that to you guys the other day when we were on with you. But this format is just what CDE likes to see a budget presented in. So once those projects are approved, we can break them down into different categories, as we're looking at, monthly transactions or monthly reports with you guys. So that way we could see, you know, have we done anything yet with the, elementary school parking lot? And we can see the costs, then we assigned X amount of dollars and we've spent X amount of dollars towards it. So that'll help too with a lot more clarity on, you know, how much have we spent? Are we coming in or at budget, or, you know, things that are running over budget? Does it make sense why it's running over budget? That kind of thing. So that is our budget for 26-27. And again, the only thing that's out there that's not necessarily verified would be the funding from the state level. But because we're in the Hold Harmless program, that doesn't affect us too much. So that Hold Harmless program, I've been explaining it like we're basically bowling at this point. They put the bumper guards up. So there's no way we can't get a pin, at least one pin down. So for the next 3 years, we're in a kind of a safety zone.
Even if you people.
Well, we were gonna ask where you want to go. That was the next thing.
I just want to say thank you, and I appreciate this, this breakdown of the budget and going through it with us. Past budgets have not been presented to us like this. So it's nice to see something that you can follow along and actually understand it. It makes sense.
Yeah, appreciate that.
This is my first budget.
Together.
Yeah, this is my first budget, so I think you did a wonderful job that I can understand it.
Good.
So, yeah, because I was a social studies teacher coach, so yeah, you know, I'm not accounting, I don't know that.
So in January, I think what I'll do is I'll just sit back and let you guys tell me what the amended budget's gonna look like. We'll see about that. I appreciate your time.
Continue educating.
That's right.
Every opportunity.
Ditto.
And I have a question, and he gets back with me and he breaks it down, and I'm like, okay, I understand.
Oh, okay, that makes sense, yeah, yeah, please continue on, I mean, the budget is really here for you guys, this is 100% so that you guys know how to run the district. So, by all means, continue whatever kind of questions you have. Thank you. Very welcome, yeah. Can I be excused?
Yeah.
I eat all my peas, I promise.
Like,
Appreciate
you
your
need somebody to walk you out, I'll go with you.
This one's just a presentation, correct?
This presentation, the final approval will be in June.
Okay, perfect. All right, moving on.
Can I make that motion ahead of time? So-
Letter B, approve classified staff employment renewals, resolution 2026-4. Dr. King?
Yeah, it's, our classified staff to bring back. So I'd recommend approval of classified staff appointment renewals resolution, the 2026-4 is presented.
Do we ask a question now or wait till we?
After the motion.
Okay, so moved.
Second.
I have a motion and a second to approve classified staff employment renewals, resolution 2026-4. Questions, comments?
Why are some in red?
Those were the ones that were added,
Okay.
yeah.
Any other questions? All right, roll call.
Mrs. Ayala?
Aye.
Mr. Bickle?
Aye.
Mrs. Hines?
Aye.
Mr. Coleman?
Aye.
Mr. Salzbrunner?
Right.
All right, board comments.
I got one. I said I wouldn't do them anymore, but I got one. I got two. First of all, Dr. Krumholz and I'm terrible at names. What's your name?
Sarah?
Sarah.
Jared.
Huh?
Sarah or Jared? Yeah.
Sarah, I know, you jumped on her floor and what I did. But you guys have done an awesome job with all this and I guess getting this on the right track. And so from somebody who doesn't deal with numbers a lot, I just want to say in the record, though we did it a little bit ago, you guys, kudos. I mean, you guys have both done an awesome job and I'm more than pleased. So thank you very much. And then my second thing is, I'd like to welcome our old people in our new positions. It's nice to see people that are getting the jobs that I recognize And I've seen you before, so to me, that gives me a feeling of comfort, knowing they know, I don't wanna say good old days, cause it was, I was here. But, how we ran things, cause my goal is always to have, I want us to be back to the premier school in the valley, or the premier district in the valley. And you guys were all here when we were there, and I am happy to see that you're all in new positions to help us get to that point. So welcome again. Thank you, though, for being part of our leadership.
Casey. My next. Going around.
You don't have to say it, you.
Yeah, I want to say thank you guys for stepping up and applying. I can't wait to see what you do with TTA and at high school. I'm really intrigued to see. Thank you. And, I also want to say, thank you, to, Mr. Martinez, the band director for he did what was it, like a fundraiser, it's more like a bake sale kind of a thing for, the district for, the last concert for the seniors, and I really enjoyed it. It kind of brought back what my older kids got to do in the past, and I was really missing that. And it was really enjoyable. And I see that, like, he's kind of new. He's still new to me because, you know, he just received the job like this last spring. So I see that that's going to be really good next year. So I'm excited about that too. And then I'd also want to say, I want to say, I want to share a heartfelt thank you to all the staff, to those that have retired, and especially to the ones that have left the district due to the decisions that we had to make to the budget cuts. I know that was a really hard choice and decision for a lot of us, and I just want them to know that, you know, we think of them, and, you know, they really shaped a lot of these kids' lives, even though they're not going to be continuing with us. And I just wanted to say thank you.
Echo everything that's been said. Congratulations to the seniors, and just a huge thank you to the entire district staff for, this has been a rough school year, and everybody stepped up, and I think we've all performed well, and brighter days are ahead, and I just want to thank the staff all across the district. So thank you. And I also wanted to shout out the band. It was very cool. I didn't plan to be in Canyon City for the Blossom Festival, but I just happened to be there, and I didn't know that the Lahana Band was going to be in the parade. And it was very cool to see the Lahana Band back in the Blossom Festival. And that was kind of a thing, like back in the day, the band used to always go to the Blossom Festival. So that was cool. That was cool.
Rod actually said the two things that I wanted to say, so I will say them differently from a person who does eat and sleep and dream numbers all day. Everything that Abacus and Dr. K have gone through and done for this district, and to help us right size where we are and to move forward from this place where we have been. So thank you very much. And also to the newly positioned people, I will echo what I heard Jared say sometime last year about trying to get to a gold standard. That's our goal. And I know that you all can help us to reach that gold standard, because that's where we need to be to make this district the district of choice and increase our enrollment numbers. So I'm very happy and proud that you applied, and I look forward to seeing what you're going to do. Thank you.
Teacher Appreciation Week was last week, so I just want to say thank you to all the teachers doing what they're doing, working hard to grow our students and being a part of this district. There's some fun things that each of the schools did for the teachers, so that's really cool to see. So I also appreciate Abacus being a part of our team and getting us on the right track and where we need to be so that we can move forward to improve student outcomes, get everyone where they need to be, and be that gold standard. So that is all. We will adjourn at 7:39.